Hello and welcome to AQA Accounting. In this session, I'll be going through the specimen paper, question 14, section B, and the focus of this will be the statement of cash flows. So let's get started. What we're going to do first is go through the workings. You should know the format of cash flow. So we'll go through workings, starting from the top, working our way down, and then we will draft the statement. So, I'm just going to do my workings on here, just because when I finish with the workings, I can do the questions side by side. Okay, so workings one. The first thing, obviously, that you start with, cash flow, is profit from operations. If you look through the data, you will not find profit from operations, so we have to work it out. And if you've had a look at the previous video that I've done, Hickey Limited, I'm going to follow the same format as that. Okay, so profit from operations comes from the income statement. We don't have that here, and so we need to work that out. So again, what I'm going to do is draft, just a rough sketch of the income statement. So with an income statement, you have profit from operations, and then you have minus finance costs, and then you have profit before tax minus the tax provision, and then you have profit after tax. Okay, so this is your IS format. Profit from operations minus finance cost, profit before tax minus tax, profit after tax. Okay, now the profit after tax, what happens to this is this then goes into your retained earnings. Okay, it comes into retained earnings. Now, for retained earnings, which is part of your statement of changes in equity, you will have a balance at the start of the year, which I'm just going to write balance BD. You have a balance at the end of retained earnings. In between, you add your profit and you take your dividends away. Okay, so what happens is you draft your IS, you work out your profit, profit goes into retained earnings. Obviously, balance BD plus profit minus dividends equals balance carried down. Now, if you look over here, you can see retained earnings 2015, 2016. 2015 is the balance BD, 3712. The profit we're not sure of, we're going to work that out, so I'm going to just leave that with a question mark. Dividends is over here, 1334. And then you have balance carried down, which is over here, 2016, 4332. Okay. Now, you can work backwards. I've got my calculator over here, 4332. We have to work backwards. So instead of minusing, we add 1334. And we take 3712 away. And that gives us 1954. Okay, 1954 is the missing number, which is the profit. Now, if we just double check it, always good to double check. 3712 plus 1954 minus 1334, it all matches up, 4332. Okay, that's profit after tax, which I'm just going to copy over here, 1954. Now, we're after this one over here, right at the top, so we have to keep working backwards. Tax provision, there are 4 tax figures. The tax provision is over here, 512. So what I'm going to do is I'm just going to draw a line so you can see we've done with this. We're moving on. 512. Now, again, we're going to have to work backwards, so I'm going to come back to that in a second. Finance cost. This question's quite nice, actually, because it's all given to you. The figures are all there. Most of them are there or there. There's very little that you're going to have to work out. Anyway, profit after tax. Obviously minus, so I'm going to get my calculator. We're going to work back, 1954. Normally you minus. This time we're going to add 512. And again, finance costs we normally deduct. We're going to work back and add them back on. 2868. Let's do that again, sorry. 1954 plus 512. This is 2466. 2466. And we're going to add the 402 because we're working backwards. 2868. 2868. So quick summary. How do we approach cash flow? If you are starting with profit from operations, they don't give it to you. IS, extract, minus finance costs before tax, tax after tax, profit after tax. Then do retained earnings, balance BD, profit dividends equals carried down. Put the figures that you have. You have carried down, you have brought down. You have dividends, or work it out if you don't have it. Work out profit after tax. Then you add your tax provision back, and then you add your finance costs back, and that gets you the profit from operations. So working one is 2868. Done. We're going to move on to workings 2. Now, in a statement of cash flow, the next thing, and if you look, there is a pattern in the past papers. There is a pattern, and the pattern is profit from operations is worth the most marks, or one of the ones which has the highest marks. The second thing which has the highest marks is depreciation or disposal. Now, depreciation is given to us, so that means we are going to work out disposal. Okay. Now, I recently gave this to my students as a test, and majority of them did not get this mark or get full marks. It's not difficult. It's just having the logical, methodical approach and knowing how to tackle the question. So I'll talk you through disposal. Okay. Now, if you look at the mark scheme, which I don't think you're going to find it online on the website, so you probably have to find it on a forum or something. But the mark scheme will probably show you show the method of working backwards. I like to work forwards. Okay, that's just the way I've always done it. And it works for me, and for many of my students it works for them. Anyway, disposal. What are we looking at? We have key pieces of data. We have the assets, 1 year and the other. We know we bought an asset for 6.6. We sold an asset for 8.30. We lost 4.85 on it. We know we had property revalued. The rest of it, I mean, you've got depreciation there. But that's basically all the information that we have. Okay, we are trying to work out, for this point number 2, equipment was sold for 8.30. We lost 4.85. We sold it for 8.30. We lost 4.85. We don't know anything else. What we need to know is cost. Cost minus depreciation gives us the net book value. We can compare it to how much we sold it for, and there we are. We know if we made a profit or loss. But at the moment, we don't know if we made a profit or loss. So how would you work this out? Well, again, there was one student who lost the marks, and I said, and they approached me and said, how are you supposed to know how to work it out? And I said, well, what are you trying to find out? We are trying to find out cost. That's important. Okay, so let's use cost. Imagine you go back to 2015 and the value of cost is 14,884. Work forwards. What happened? You bought an asset. So we're going to add 6600. This is the balance BD. We bought an asset. Okay, we bought an asset. Then an asset was revalued. Well, how do we know what revaluation is? If we have a look, obviously if you have an asset that's revalued, the cost goes into the FP. Well, go down to revaluation, 1830. So that's going to increase the value of our assets. So balance BD, we bought something, let's add. We had a revaluation, we need to add. Now, if you do that on the calculator, 14,884 plus 6600 plus 1830, that equals 23,314. Okay, BD, purchase, revaluation. Now, if you look at 2016 tells us it's 21,450. Now, something has to ring a bell here. It should be 23,314, but it's 21,450. The value of assets has gone down. I mean, the difference between these two is 23,314 minus 21,450 is 1864. 1864. This is the missing cost for the one you are getting rid of. Cost has come down. Why? If you get rid of an asset, if you dispose of an asset, you have to dispose of the cost. Okay, so that's why there is a missing number, because at the end of the year we would have got rid of the cost. So what do? Well, cost, simple, 1864. Depreciation is 485. Oops, let's get the lights back on. Okay, so 485. Cost minus depreciation equals net book value minus 485 is 1379. This is the net book value. We sold it for 830, which means if you sold it for 830, well, you can figure it out. We made a loss, 549 loss. Okay, so that's key piece of information number 2. Okay, if you want to pause just to sort of grasp exactly what I've just mentioned, then feel free to do so. In summary, we've done profit from operations and we have done the disposal. Okay, now those two carry the most amount of marks in this question. I wouldn't expect AQA to put in a full question where there's lots and lots of working out. It's 14 marks. You have around 20 minutes to do it. It's not a huge amount of time, so they will chuck in a few things in there, some easy stuff and some difficult stuff, and you can see when we put the whole question together that those two things that we've just done, they carry 9 marks out of 14, massive amount of marks. Okay, now I can't squeeze everything on this table so you can see, but I'm hoping if you probably want to do a screenshot of the question so you can refer to this at some point. But what I'm going to have to do is I'll leave my workings just there, and I'm going to have a piece of paper. I'm just going to place that on top so we can start the question. Okay. Now, first thing is, let's get the title in. So we have got HQV PLC. Okay. Statement of cash flows for the year ended 30th June 2016. Okay, so we have our title. The first thing is profit from operations. Profit from operations. Now, 2868 we've worked that out already. We're going to have 2 columns, one for our final subtotal figures and one for sort of workings. So 2868 profit from operations. Then we are going to do depreciation because it's easy and it's given to us. And depreciation, if you have a look at the question, it's over there, 1217. Okay, as you know, depreciation we have to add back. It's a non-cash transaction, so we are adding that back. If it's a minus, I'll put it in brackets. If it's not, I'm just going to leave it as it is. Okay. Then we have the disposal, which was a loss on disposal, which we worked out. That was one of the heavy marks. If we go back to it, just over there, 549. 549. So again, it's a loss, so we are going to add that back. Okay. Once you've done this, then the rest of it's straightforward. You have inventory TRTP. Okay. So we have, if we look at inventory, you can see inventory went down. So a decrease in inventory. And then we had trade receivables went up, increase in trade receivables. Increase in trade receivables, and trade payables went down, so decrease in trade payables. Okay, now the first thing is, if you have a look at inventory, inventory goes down the way I think of it, inventory goes down, we've sold it, money's coming in, so it's a positive. The difference between those two is 26. Okay. Trade receivables, they went up. Okay, and the way I look at that is we have sold more on credit, so we are receiving less cash, and therefore we have a negative impact to cash. And trade payables, if you have a look at trade payables, 652345, we're working this way. Okay, trade payables went down, that means we paid suppliers, which means we have less cash, and the difference between those two is 307. Okay, just one moment, my laptop battery's going to die. Just one moment, feel free to pause there if you want to catch up. Okay, so first one, third one, they are the difficult ones. The other ones are relatively straightforward. We can do a subtotal at this point, which is 4256. Okay, 4256 is the subtotal, and that's cash from operating activities. Okay, this is the first section. The first section splits into two, which is your operating activities section. Once you've done part 1A, 1B, you typically have tax and interest in there. So interest paid and income tax paid. Now interest, if we look at the question, I think it's given to us. Finance charges, 402, just there, 402. So 402, sorry, wrong one, 402 over there. And tax is, right, the tax paid is 398. Now in Hickey Limited, another one that I've done, they never gave that. You have to work it out. So here it's given to us. Okay, so we're just going to deduct those two, 398 and 402. Okay, now that gives us a new subtotal of 3456. I'm going to just move that down actually. Move it away. Okay, and that's your net cash from operating activities. Okay, apologies for those two errors. Okay, so that's section one done. The next section is the investing activities section. Okay, in this section we usually have transactions to do with assets, whether it's a purchase or sale. So if you have a look at the question, we bought an asset for 6.6 million. So purchase of non-current, what's happened to my pen? Purchase of non-current assets. Okay, and that's 6.6 million. If you're buying an asset, money is going out. And we sold an asset and we had 830 coming in. Sale of non-current assets. Okay, so investing activities section, we have two things over here. A purchase and a sale. So we have 5770 as our net for this particular section. And that's your net cash used in investing activities. Okay, and the last section is the financing activities. Okay, typically here you have transactions to do with shares, dividends and borrowing. So we're going to go with, let's go with dividends first because it's given to us. So dividends paid, again given to us over there, 1334. Money going out. We also have, if you have a look, remember what I mentioned, it's to do with dividends. It's also to do with typically non-current liabilities. If you have a look here, what's happened is we have received money, an extra 350,000. We've received 350. That's money coming in, and that's from, where are we? Long-term borrowing. Okay. So we have funds from long-term borrowing. That's money coming in. And the last one is if we look at shares, has anything changed? So if you look at ordinary shares, we went from 4.2 to 6.3. Share premium went from 1.12 to 2170. So the difference between, if you do 4,200 plus 1120, that's 5320. Okay, 5320. Add these up and take 5320 away. Basically, this minus from this. Okay, we have a difference of 3,150. That's money coming in from the sale of shares. Okay. We've got money coming in from shares. Now, if you add these up together, the subtotal for this is 2166. Okay, that's overall a positive effect, money coming in. Okay, so essentially we have 5770, 2166 and 3456. These are our three final figures. Okay, just bear with me for one moment. Okay, we've got the final section. So we have the overall change in cash. Now I've just done a quick calculation. We've got 4256, 3456 coming in. Sorry, 3456 is the final one for section 1. 3456 coming in, 5770 going out, 2166 coming in. Overall, if you think about it, 3 plus 2, 3, 4, 5, you're looking at 5.5 grand. It's very similar. Overall, the difference is 148. Okay, and this is a negative. So we have a negative change in cash. What we call a net decrease in cash and cash equivalents. Okay, if you have a look at the FP, you can see the bank. Now, cash and cash equivalents was a positive there, 87. Cash and cash equivalents at the start of the year, and cash and cash equivalents at the end of the year. At the start of the year, 87. At the end of the year, we had nothing there, which means we probably had an overdraft of 61, which is a liability. Okay, now if you check this out, at the start we had £87,000, 148 went out, and that equals 61 negative, and that is a negative because it's an overdraft. And that's the end of the question. Okay, there are probably some things that I've skipped on just because of time. But again, if we do a quick recap, you need to do profit from operations first, and then depreciation, disposal. These three are probably or typically the ones that are going to be the most difficult. Luckily, depreciation was given to you. But anyway, profit from operations, loss on disposal, depreciation, okay? Inventory, TR, TP were given to us. We're just doing the differences. Make sure you get it the right way around and know from 15 to 16 what's the impact on cash. Interest paid, income tax paid given to us. And then the asset purchase was, we were told, we know how much we sold it for. The dividends are given to us. The long-term borrowing, 350. Again, do workings for these. Inventory to show 805779 214311. You know, it would be beneficial for you to show this as part of your workings. And I guess I've done the difficult stuff and I've left the easy stuff out. But yeah, you know, it's given to you. Investing activities given to us. We know how much we bought it for and how much we sold it for. The dividends paid was given to us. The long-term borrowing is the difference between those two. And the sale of shares, obviously, if you look at 15's figures and 16's figures, you can see we've gone up, which means money is coming in. Overall, we're at a negative change in cash and cash equivalents at the start of the year and at the end of the year. Always start off with balance BD, plus or minus. It should equal. If it doesn't equal, something has gone wrong somewhere and you've probably missed something out. But that's basically cash flow, specimen paper of the current spec 7127, 3 sections of cash flow, profit, investing, financing, and the reconciliation of cash. Okay, oops, let's get that back on again. So yeah, I hope you've enjoyed the question and I hope it has clarified any misconceptions for you. That's another cash flow question done. And if there is anything in particular I can be of any assistance, then please do let me know with regards to this topic. Feel free just to comment and do subscribe as well. Hopefully there'll be some more videos coming out soon. Take care, all the best, and have a good one.